can you please explain a little bit more about the lock-in periods with respect to the secondary market trades?
Yeah, of course. As we were explaining earlier, the primary market is when you come in and you invest in that SPV, as we've explained. The SPV then purchases the shares from the company. But what we expect is once you make that investment, that you're going to be holding that investment at least for a year. That's our expectation. So that's what we call the lock-in period. Now, it's not because we want necessarily to stop you from trading, but there are certain regulations that are in place that would prevent you, and that's what we have to enforce in this case. So the lock-in period is a year in the primary market. If you invest, you're going to be holding your shares at least a year. And then after a year, at that stage, we'll announce whether or not that company, based on the criteria that we've already discussed, is eligible to be listed on the secondary market. If so, then the opportunity of being able to sell your shares will present itself. So, that's what the lock-in period is, in effect. It's there because of a regulatory reason. And also, I think another side of this is, we wouldn't want to just introduce an immediate secondary market afterwards. This isn't an IPO where, you're doing a pre-IPO and then now it's going to be listed. That's not the type of arrangement here. You're making a private investment into a private company, and then later on, down the line, we're introducing a secondary market that is in alignment with the last funding round of that particular company.
I think another point to add to that as well is that there is no guarantee that any of our primary markets will make it to the secondary market. In fact, we may not legally be able to do that, because when we sign an investment agreement between the SPV and the company, there may be certain restrictions that they enter in, that they insert into that agreement, whereby we would not be allowed to make a secondary market for the SPV. So sometimes legally we would not be entitled to do that. So we only do it where we actually can. So
are investors privy to that information beforehand?
I think that's a really important additional disclosure. Now we're bringing the secondary market out of beta, that we should definitely be, that we will add, in fact, to the disclosure documents, whether there is any restrictions on whether we could have a secondary market in the future or not. I think that's a really good point that's come from this.